This is not financial nor professional advice. This video is for entertainment only. Hey everyone, how you doing?
I understand nothing.
If it's anything like me,
Emotional damage.
I'm doing well as far as the stock market goes, but I'm not doing well in the way I normally like to do well. I'm usually a raging, hungry bull looking for the next upside, following Cathie Wood and hoping she produces another miracle. And it's so much fun, but boy, are those days long gone.
Come on, my lover. Come on, my friend.
And I think they might be gone for a good long while. We have the guarantee of interest rates coming. Now, I always say watch the 10-year bond, okay? It was down a couple months ago to like 1.4, 1.5. And now it's leaped over 1.8. It's hitting 1.85. And they haven't even started to raise rates yet. What's happening is the Federal Reserve, is putting less money into the bond market. They're buying less bonds, and so that tends to drive the interest rates up. But it's being driven up because the market is not paying as much for the bonds. And so they got to raise the interest rates to get people to buy the bonds, which will lead to interest rates increases. Now, we're promised interest rate increases anyway, regardless of what happens. They're going to increase at 1%. You know, this fantasy of zero interest rates is going to come to an end, and they've guaranteed us that. And the reason for that is inflation is starting to run wild, and the only way they can really get it under control is to decrease the tapering, which will be done in February, and then they're going to increase the interest rates. I expect 0.25% at a time. I expect them to do it at least 3 times to get it up near 1%, and maybe 4 times. But they're going to do the 1%. They've got to. Right now, it looks like such an error that they didn't start doing this sooner. And so they're going to look quite foolish if they don't at least do the 1%. If they do the 1%, they can always back off. So looking at this, I started looking at index funds to short. And what I found with the stock market generally is it is very hard to say what a specific stock will do. The only time it's easy to do that is in a raging bull market. You picked anything reasonable, it was going to go to the sky, okay? Those days are over. They're done for at least another year, maybe 2, maybe 3, who knows? But I think the atmosphere has changed, and we've got to change our way of thinking. You know, it isn't like Cathie Wood. She is sticking with a philosophy. It just looks suicidal at this point.
What kind of shit is that?
I mean, I invested in ARK funds during the raging bull days. It was great. You know, you made lots of money. But I tell you, now is no time to be in the ARK funds. And Michael McCurry, he could see the crash coming in 2008. That is his claim to fame. But he has sold all his stocks now because he can see what's coming this time too. It's a similar kind of crash. For most of the millennials, you have not seen a major crash. Your parents saw a major crash in 2008. And maybe you got some of the effects from that, but you probably weren't directly investing at that point. You were too young. But this is your crash, so to speak. and it's so weird and unexpected because it's coming off, 2020 and even into the first part of 2021. The market was just a raging bull, and you could buy anything and it was going up. Those days are gone. I can't get myself to short the ARK fund just because I have this loyalty. And I have these moral things that keep me from doing certain things that I probably should do. And if I was following the numbers, I would do. And if I was following the numbers, I would short ARK or would consider it. But I can find other things to short. So I'm moving along on that one. The biotechnology index on the NASDAQ, that's LABD, that has been a monster good thing to short if you can short it. I can't get myself to short it because I love biotechnology, but you're making like 7 or 8% in a day. The same thing with the small stock index funds. And I'm talking about SORTY, that's SRTY, and also TZA, that's TZA. I'm not going to say the whole long name because these inverse funds, these three are all 300% inverse funds. LABD, TZA, and SRTY are all 300% inverse funds. For every dollar that their index goes down, these funds go up $3. And I'm getting to love these leveraged index funds, and I think I may do it as a form of habit. When I think I know that the market is a bear, yeah, I'm going to be in the leveraged inverse funds. But I can go both ways, and I only mean this in a financial sense, okay? But when it turns bullish, I'll triple leverage the other way. I'll triple leverage the S&P 500 and the Dow. And the QQQ. I love the QQQ when it's bullish. It's not bullish now. And it's starting to crack. You can see the big companies starting to come down. I noticed Facebook, which is the company that deserves least to come down, is now into the 310s. Okay, this should be over 400. Okay. Microsoft, this is a stock that's 8% of the QQQs. That's starting to come down. Apple's starting to hesitate a little bit, I think. So you can see these big companies that are loaded on the QQQs. I think my best bet right now for me, without having moral conflicts and being able to look at myself in the mirror in the morning. But again, there's nothing wrong with shorting these things, because you know what? When you short any of these funds, you are making a promise to buy it again in the future. And you're going to buy it in the future when you think it's coming off the bottom. Okay. And so actually at that point, you're helping lift it up. So there's nothing wrong with shorting them. It's just what you're saying, that the market has massively mispriced them and the market has gone to an extreme. And it usually goes to an extreme on the downside before it turns. Okay. And we're going to capture that. And then when it hits bottom, I'm going to turn bullish and I'm going to triple leverage it going upside. Okay. When the market returns to quotes normal and it seems like, it's just okay, then I will just do conservative stocks and maybe do a flyer here and there. But I think statistically, it's easier to predict what a group of stocks will do, and that's what an index will do. An index is a group of stocks that have been selected on some criterion. And like the QQQs, they've been selected because they're the 100 best stocks on the NASDAQ. When things are bullish, it's hugely in your favor. But when that turns the tide and goes the other way, yeah, it can go to an extreme, and you can double your money if it goes up 34%. And I don't think these stocks are going to shoot up anytime soon. Anyway, I don't see it until interest rate hikes stop or they start to come down, and that's not going to happen with the financials, at least for the next year. I always take it year by year. I'm not making any grand prediction for all of time. The next year, I think I'm going to be shorting the index funds a lot, and I may move around, and I may stop, and I just may return to conservative investing. But the conservative things haven't been working out, or they're starting to break down. Berkshire Hathaway is starting to put on a halt. And I think that's because the financial services are not doing as well as we thought they would. And the one thing that should benefit from increased interest rates, the one thing that should improve easily is financial services. And we're seeing Goldman Sachs and the Bank of America come down. You can't, when those start to come down, to me, that's the lark in the coal mine that says the whole dang thing is coming down. Okay. And so what we want to do is we want to triple leverage the downturn with some of these shortages, short funds, short index funds, inverse funds. My cat's getting excited about this too, that I look at. And I think that's the way to go for now. Now, these leverage funds are not for everyone, and it's a very risky strategy and probably very inappropriate for 99% of people. But this is kind of what I've gotten used to, and so I feel okay doing it, but I'm not recommending it to anyone. This is just what I'm doing. And I think I got a long time frame. I don't feel like I got to watch this every single minute, like in some situations until recently, because now I'm convinced it's going down, and it's going down big time. And if I'm not looking, I might spare myself from watching that one fake bull rally, and I think we're going to have multiple fake outs. What's happening is we keep having lower highs, and especially when the market sells off at the end of each stock day, that is such a bad sign. So right now, I'm putting some money into shorting the S&P 500 just because there's so many stocks in there that have not come down. And of course, the easiest thing to short is the QQQs, and the symbol for that is SQQQ, 3 Qs, SQQQ. So right now with me, it's just SH and the SQQQ. And if you really want to go out there and make some shorting money, and actually the charts support doing this, I still will think about doing LABD, TZA, and SRTY. So LABD, TZA, and SRTY. I will think about them, and I can get over my conflicts. But maybe I'll make enough with the SQQQ that I'll be just fine. Thanks for watching the video. Be sure to like and subscribe so that you receive future notifications, and share the wealth with others if you think I'm onto something here. Thanks a lot. I will see you in the future.